It's Wisdom Wednesday with growth coach Gina Grebinger and production leader Robert Filial from the Moore Mortgage Group, powered by Annie Mac Home Mortgage.
Hello, good morning.
Hey there.
Robert, let's talk about some investment properties. Give us some advice and tips, and really, is this a good time to buy investment properties? Let's talk through that.
I love this question. I think it's always a good time to buy investment properties. I think that it is a healthy piece of a well-rounded investment portfolio. There's a couple key strategies to buying investment properties there, right? Like you definitely want to make sure that you understand cap rates and how that works. You want to understand cash flow. One of the biggest questions probably out of the gate is, are you cut out to be a landlord? Are you going to do that? Are you going to have someone else manage it? Like if your tenant calls you at 2 o'clock in the morning because the light bulb is out, which will happen, but how is that going to impact you, and what's that going to do?
We
right?
can tell where I stand on that side
right?
of the fence.
But you may decide to just buy an investment property and have it professionally managed,
Yeah.
right? For the 10 to 12% typical management fee that's charged, it's well worth it. All the investment properties that we own, other than the short-term rentals we do, are professionally managed by someone, so I don't get that phone call, right? So I think it's always a great time. You know, the key to the investment property is looking at your cap rates, looking at your cash flow models, and make sure that it works for you and that you're comfortable with it. We're kind of in an unprecedented time in history where clients who own homes are sitting on more equity than they've ever had, right? So it's a really good opportunity to maybe look at a cash out refinance, maybe tap a home equity line of credit or a home equity loan, and put that equity to work for you with the purchase of an investment property, something that you can build equity in. We talked earlier about, what's a bigger risk, rate or price, and price is a bigger risk. Like all of these properties are going to continue to appreciate. So I think, getting into the rental game, if you're not super risk averse and are open to it, now is as good a time as any. Now you're not going to find the steals that were out there before. There are people that will make the argument, oh, wait until the market falls a little bit. I don't think we're going to see a real big trend. In some pockets we'll see a little pullback, but I think we're talking 5 to 7%, not massive fall in value. There's too much demand. So I think rental's a great path forward. I'm a little biased because we own rental properties. If you can do a fair amount down and buy something that's in an area that you love as a vacation home, the agencies do allow you to use that as a short-term rental also when you're not there. That's something that we've personally done, and it's been really awesome because we use it when we want it. We can rent it when we don't to help offset and some of the cost. So that's something that we're really well versed with and can help with as well. I think the biggest question, as I mentioned out of the gate, is, are you going to manage it or someone else? How risk adverse are you? But it can be really good. And it's something where I think if you can even just be in a break-even position from a maintenance, factoring in maintenance and taxes and insurance, and you start building that equity, and you look up 5, 7, 10 years down the road, and you have now an asset that you can sell and cash out a 6-figure sum, it's pretty powerful.
Definitely.
So we were fortunate enough to buy a handful of rentals when the market was down, and held on to them for several years, and it did not suck. It was good.
Love it. See you next week.
Bye, guys.